All right, welcome. Today, we're going to put on our detective hats and really dig into the story behind Amazon's stock price. There's a pretty fascinating mystery unfolding in the charts, and you know what? We're going to follow the clues together and see exactly where they lead.
So, right off the bat, the case looks pretty solid. Amazon is trading at nearly 93% of its 52-week high. Now, for any stock, that is a huge signal of powerful momentum. It shows a ton of confidence from the market. Honestly, it's the kind of clue that makes you think, okay, this is going to be a simple open and shut case.
And yeah, this seems like a super clear bullish signal, right? But, like any good detective knows, you have to look at all the evidence before you can reach a verdict. Sometimes that most obvious clue, well, it's just there to distract you from what's really happening under the surface. Okay, so let's dive in. We're going to start by examining all the clues that point to a strong, healthy stock. Think of it like this. We're building the prosecution's case, and right now it's looking incredibly strong. The initial evidence? It's just overwhelmingly positive. I mean, look at this. The price is pushing its yearly limits. You've got the MACD, which is basically a fancy momentum checker, and it is flashing bright green. On top of that, the trading volume is just through the roof, which shows a ton of interest. And the moving averages, they are all lined up perfectly. Everything here is screaming that this uptrend has plenty of juice left. Now, what's really interesting here is how the moving averages just confirm that whole story. They smooth out all the daily chatter to show us the real underlying direction. And for Amazon, the 5-day is above the 20-day, which is above the 50-day. It's a textbook bullish signal. It tells us that, without a doubt, buyers have been in firm control lately. But just when the case seems completely closed, we find a clue that contradicts, well, everything we've just seen. And this is that one piece of evidence that makes our whole investigation take a very sharp turn. And this slide, wow, it just lays out the central mystery perfectly. On the left, you've got the price, climbing higher, looking strong. But on the right, we have this indicator called the ADOSC. And simply put, this tool tries to figure out if the big money, the institutional investors, are buying or selling a stock. And right now, it's suggesting that even while the price is going up, some of the bigger players might be quietly selling off their shares. So the crucial point here is that this kind of split, this divergence between price and volume, it really forces you to question the strength of this whole uptrend. It's kind of like seeing a crowd cheering really loudly, but then you notice some of the most important people are quietly slipping out the back door. For any analyst, ignoring a red flag like this, well, it can be a really costly mistake. It might mean this whole rally is just running on fumes. So to solve this mystery, we've got to bring in some specialist tools. We need more context, right? We need to see if we can find any other evidence that backs up either the bullish price action or this more bearish volume signal. Well, it turns out our specialists are giving us some pretty mixed testimony. The RSI, the Relative Strength Index, it's at 67. Now, that's strong, but it's not in the overbought red zone yet. That tells us there could still be some room to run. But then you look at the stochastics, and they're telling a different story. They're hinting that the upward push is losing steam and the stock might need to take a breather. Okay, so after reviewing all the clues, the good, the bad, and the just plain contradictory, we can now outline 3 possible verdicts for this case. These are the most likely ways this whole story could play out, based on everything we've managed to uncover. So let's break these down. In scenario 1, the positive price trend just wins out and the stock blasts higher. Simple. In scenario 2, that worrying little signal we saw in the volume proves to be the real story, and the price gets rejected and falls. And in scenario 3, well, neither side wins right away. We get a standoff while the market just tries to figure out which clue is the most important one. So, as the detectives on this case, what are the final clues we should be watching? There are 2 key price levels that are going to tell us which of our 3 verdicts is the correct one. These are the levels that will ultimately solve this case. This first number, this is the critical resistance level. Think of it as the ceiling. If the price can break through 248.49 and do it with conviction, that's the signal that the bulls were right all along. That's the confirmation their case needs. And on the flip side, we've got this number. This is the key support level. This is the floor. If the price breaks below here, it gives major credibility to that bearish scenario. It would pretty much confirm that the warning sign from the volume indicator was the real deal, and a pullback is probably on its way. So there you have it. The evidence is all laid out on the table. We have a powerful uptrend that's fighting against a pretty significant warning sign hidden in the data. We've identified the key levels that will decide the winner. So now, the case is in your hands. Which clue do you trust more?